All right, everyone, welcome. We are pleased to welcome Oliver Velez. He is our inaugural keynote speaker of the first ever Traders Expo, international best-selling author, world-renowned trader, advisor, and entrepreneur. He is back after a 7-year hiatus, representing a rare opportunity to meet one of the most sought-after speakers and teachers on the subject of trading the financial markets for a living. The Dow Jones has dubbed him the Messiah of trading. Oliver, thank you so much for being here. Always a pleasure to speak with you.
Fantastic. Thanks for having me again. Always a pleasure to be here as well. Well, traders, here we are once again with a very, very, very fascinating trading topic, one which I believe really fits with our current times and the current situation that we find ourselves in, not only in life in general, but with the markets. It's truly a dynamic time. So I'm going to speak to you today about my best long-term trading strategy. Now, to be very honest with you, this is a simple but extraordinarily powerful strategy that I believe helps the majority of people really be on the right side of the markets for their long-term plays. Now, this is outside of day trading. This is outside of short-term trading, like swing trading. But we're going to focus on the long-term approach, which is truly where the biggest amount of money, the biggest amount of opportunity is. Not that short-term oriented trading, which I am world renowned for, is any less important, but when it comes to wealth, when it comes to the accumulation of generational wealth, this is where you want to be. And I believe this is the strategy that you want to really have under your arsenal. And I'll be very honest with you, I have not shared a great deal of this simple but very powerful tactic or strategy with a great many people. This is usually a part of my strategy, which is reserved for my wealth trading team. I have about 450 some odd members since 2009, playing the markets together as a group, profiting together from a long-term perspective. And as you can imagine, if we started this wealth group in 2009, imagine the 10, 11-year progress we've made over that time. But we find ourselves 20 years later, 21 years later, in another very interesting point in the markets. And I believe that what I'm going to cover today is going to be a huge value to you. Now, if you're wondering, Oliver, why do you have glasses on? I've been trading the markets for 38 years, 33 of those years professionally. This was at a time when screens that you stared at were monochrome screens. That's the black background with the green electronic lettering. This sort of damaged my eyes over several decades of over a decade of staring into screens like that. So anytime I have a light and I have a light staring in my face, it really makes my eyes very, very sensitive. So I wear glasses to sort of subdue that. So just to get that question out of the way, but very quickly, let's go on to some things. Guys, I placed my first trade in 1981, just for the benefit of those people who do not know who I am, right? Placed my first trade in 1981. My first professional foray in the markets came in 1986. Founded a company called Pristine in 1994, which went on to become one of, if not the world's largest training educational firm for professional traders all over the world. I then went on to actually create one of America's first direct access trading firms back in the mid 1990s. That became the second largest direct access trading firm. That's very different from the traditional brokerage firm that was very popular at that time. I've been known as the father of swing trading. I coined that term in the year 1992 in a very famous interview, and became really the spokesperson for this new style of trading called swing trading. You can Google that. Take a look. Google Oliver Velez, swing trading. You'll find the history. Barron's in 1998 ranked me the #1 source to go to in all of the United States if you wanted to really learn how to play the markets professionally. Dow Jones in 1999, the venerable Dow Jones dubbed me the Messiah of day trading. Incredible. And of course, the International Day Traders Expo, the very first expo, the very first international event that this industry, the short-term industry, and anyway, the trading industry got together to form their first annual event. They chose me to be the first keynote speaker 2 years in a row, 1999 and 2000. And I was very proud to accept being the representative of the entire trading community. I am the author of 5 international best-selling books on the topic of trading the markets for a living. This is what I've been doing all of my life. I am very proud to say and honored that these 5 books have sold more copies than almost all trading books combined. And they're written in 5 different languages: English, of course, Spanish, German, Mandarin, and Japanese. Now, I today run one of the largest trading organizations in the industry, not the world, with over 10,000 plus equity and forex traders, many of whom I fund with my personal capital. And I continue to advise every now and then various exchanges around the world. Now, let's delve into, now that you know who I am. This is a very quick picture of me speaking at the first International Traders Expo in 1999. This is the article in which Barron's ranked my services the number 1 services in the country to go to, in the United States to go to if you wanted to be educated in this field. And this is the first service I formed in 1994. It was one of the first facts-based services in this industry, and it became one of the most respected and one of the most followed newsletters of the day during the 1990s, with over 4 million followers at the time. Now, very, very quick picture of a variety of my books sort of in a pile here. And this is how I want you to follow me, guys. If you find anything that I speak about here today, if it touches you anyway, if it resonates with you, if I make the hairs on the back of your neck rise, or if I give you aha moments during our talk today, follow me. I do a lot of work on Instagram. That's the first one. I go live most of the time on Periscope. There's an English one and a Spanish one channel. And I believe I have one of the most popular and one of the most valuable YouTube channels when it comes to trading, whether it's short-term, long-term, or what have you. Follow me there at Oliver Velez Trading. And of course, you can always follow me on Facebook. Now, let's talk about long-term trading. Okay. And I want you to understand that when I speak about long-term, I'm speaking more along the lines of, I guess, the Warren Buffett approach to trading. Not quite, though. I am probably less long-term than at least the public's general idea of how Warren Buffett trades. I personally know that a lot of times Mr. Buffett is not as long-term as his image would have everyone believe, but he does have the reputation of being extraordinary long-term, like holding things for a lifetime. That is not what we're talking about here, but definitely holding things for years and sometimes a decade or two. So this is where the big money is, guys. And a lot of people ask me, Oliver, so I'm confused. Should I be a short-term oriented trader or should I be a long-term trader? And the answer is both. You can't choose when it comes to these. You want to have a short-term game plan, and you want to have a long-term game plan. The short-term game plan is for generating income. The wealth game plan is for generating generational wealth. And that is what you always as well need to focus on. You need to balance these 2 approaches to the market. And so there's no choosing, all right? You do them both. You dedicate time and resources to them both. Now, here are the 5 things that we need to go into the wealth game. I need us to have a monthly chart. That's where every bar on a specific chart represents 1 full month of trading, right? I need us to overlay a 20-period simple moving average on that monthly chart. Then we're going to take a 50-period simple moving average and overlay it on that chart. Then we're going to take a 200-period moving average and overlay it on that chart. And then I'm going to teach you my space concept, all right, for what I call kamikaze buy setups, as well as when to take profit. So our space concept is going to be our profit-taking concept and sometimes getting in on super valuable low price opportunities. Now, so we're going to take, here are the 5 rules in summary. And actually, I took these images, guys, today, literally minutes before this event started. So here is today's monthly chart of Apple. Every bar represents one full month of trading. Obviously, the red bars represent the months that went down in price, and the green bars represented the months where the stock closed much higher or higher than where the month started. All right. So currently, everyone I'm sure is familiar with what's happened with Apple. We've had Apple's had record third quarter earnings, just reported a couple of days ago on Friday, I believe, and uh, uh, the stock has announced a 4-to-1 split, but currently it's still trading in the mid $400 price range, as you can see. So this is the monthly chart. That's tool number one. We need to overlay a 20-period simple moving average on that chart. All right. Now, guys, I've been trading with moving averages for a very long time. From a technical perspective, I have found no evidence that the sexier varieties like the exponential, the weighted, the triangular are any more superior than the simple moving average. So I stick to simple moving averages, just so you know, because that's a frequent question that I get. So now what moving averages do is basically smooth out the data. It eliminates a lot of the noise that you see in the up and down bar movements of your stock. So if you really want to know what the vertebrae of a stock is, what the general underlying prevailing trend is, you put that 20-period simple moving average on, and there you have the stock's backbone, the stock's vertebrae. All right. Not the limbs, not the legs, its center, its core, its nervous system. And that 20-period moving average on Apple has been rising for the most part for quite some time, at least over the last decade or so, more actually. All right. Now we need to overlay another moving average, the 50-period simple moving average. Now, this is very important. All right. We need these two moving averages to operate in a buddy system. All right. Most moving average systems are best utilized in a buddy system. So, right, we got a rising 20-period moving average here. We got a rising 50-period moving average. And when both of those things, both of these items are rising in tandem, like they're railroad tracks, man, you have something extraordinarily powerful. So we need, with our wealth, to operate with both of these moving averages. But we're not done yet. We need one more. We're going to put that 200-period moving average on there. Now, that's not a moving average that we're going to utilize to determine what the prevailing trend or the stock's vertebrae is, that nervous system. That's not the moving average we do this with. This is going to come in handy a little bit later, which I'll explain. The two most relevant moving averages for the most part will be our 20-period and our 50-period moving average. Now, the last thing we need is the space concept I told you about. Now, I'm going to have to spend a little bit of time on here explaining my space concept. Now, I want you to note the space between the 20-period moving average here. Let me get my pen up here. I want you to note the space between the 20-period moving average here and the 50-period moving average. This is the space. See? Now, I want you to notice that whenever, over the last several years, whenever Apple has sort of dipped in between that space, there has miraculously almost become a major buy opportunity. That space, traders, between, especially if the moving averages are rising, that space between the 20 and 50-period moving average is statistically one of the best opportunities to get into a very high quality, institutionally followed stock. Now, what do I mean by that? We're not talking about Joe Schmo's pizza shop on the corner that nobody's interested in or following. We need to play our wealth game with stocks that have institutional sponsorship, institutional following, mutual funds, pension funds, big giant hedge funds, large trading organizations like Berkshire Hathaway, Warren Buffett's organization. We need stocks that are followed. All right. This is what takes the gambling part out of it. And I'm always telling my traders, look, we focus on the richest companies in the world, period. Companies that have enough money to basically outlast their problems, buy the solution to any issue, any challenge they have. They have enough money. Money's not the issue. It's just growth, 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 growth. We need to stay there. We need to root our lives in the lives of those companies, the companies that you know that when you die, all right, they're still going to be around. Okay. We don't gamble with our family's fortune on Joe Schmo's pizza shop down the corner who plans on opening up 2,500 of them around the corner. You know, that's more of a gamble. There can be a little part of your portfolio for that, but I'm not talking about that. I'm talking about taking quality stocks, your Costco's, your Home Depot's, your Apple's, you understand, your Starbucks of the world, your Facebooks of the world, your Microsofts of the world. You know, these are the things that we know make a lot of money. These companies make a lot of money. They will always come out of the situation having found a solution to their problems. They have enough money to buy anything they need to grow, to continue to succeed, and their life's expectancy is beyond ours. Okay? So when it comes to these, this space becomes a very valuable space. Now, in this space, traders, right? In this space, we begin focusing on playing the color game. So whenever Apple drops between the space between a rising 20, a rising 50, I'm looking for when does the stock take out the high of the next red bar? So it's got between, but when does it trade above the high of a red bar? Boom. All right. We've got in this space. When does it show me the strength to trade above the high of a red bar? Now, what you can also do is play this color game right above the 20 period moving average as well. So here, when does this red bar's high get taken out? Boom. Okay. We've touched the 20. All right. Once you come near the 20, on the 20, or between the 20 or 50, you can start the color game. So after I come near, let me show you this again. This is very important. So in this case, we come between. When does red get taken out? In this space, we kind of come between a little bit. When does red get taken out? This red is near the 20. It doesn't come between, but we can still do it as long as we're close to the 20. When does green take out red? Here we touch the 20. Now it's time to play the color game. When does green take out red? And these can be throughout the history of your stock, those very, very lucrative, very opportunistic buy points. Green takes out red. Let's look at the history. Green takes out red. All right. Green takes out red here. Green takes out red here. Green takes out red here. We come in between again. Green takes out red. Green takes out red. Green takes out red. Green takes out red. Now, so we understand this concept of the space between, all right, the 20 and the 50. That's space concept number one, right? Now, there's another concept of space. The space when the stock moves away from the 20 period moving average. Look at that distance. When we move a very decent distance away, I know this is subjective, you have to take profits. You've got to reduce your wealth position. We increase our wealth position near the 20 and in between the space of the 20 and 50. I'm going to repeat that. We increase our wealth position near the 20, or better yet, in between the space between the 20 and the 50. But we reduce our position away from the 20. So here's how this dual space concept works. We slip into the space, we increase our position. We slip back near the 20, we increase our position. We're in the space here, we increase our position. We're in the space here, we increase our position. We're near the 20 here, we increase our position. But when we get away, we reduce. When we get away, we reduce. When we get away, we reduce. when we get away, oh, whoa, what happened? When we get, uh-oh, let me see, give me a second here, guys. There we go. When we get, nope, that's not it. There we go. When we get away, we reduce. A lot of people are asking me, Oliver, is it a smart idea since Apple has announced a 4-to-1 stock split? Should I be buying? I would say wait for the stock split. All right, you might miss a little bit more upside or whatever, but this is not a buy time. You're too far from your key moving averages. All right. So I hope you guys understand that space concept. I have a limited period of time, so I can't belabor the point. Under normal circumstances, I would spend a great deal of time on this concept to really lock it in for you and to go over a million different a million different examples so that it would be seared into your heads, into your minds. All right, so let's take a look at some examples here today. So these are all charts I grabbed from Today Traders. Everything is minutes before I went live here with you, okay? So you're not looking at dated examples. I just grabbed some of the top things that we are currently in, okay? I'm currently in particular. All right, so I want you to take note here. We've got the 20-period moving average, that's the blue line. We've got the 50-period moving average. Now, whenever you don't see the 200, it's because the stock doesn't have enough history, doesn't have, 220 some odd bars to enough data to get that 200-period moving average, but it will come as the lifespan of BABA extends, right? So look, again, you can play the color game near the moving averages. Look, boom, green takes out red. Boom, send that bullseye in there. All right. Where would you protect yourself? That's a different topic. You do have to protect yourself. All right. Now, we're going to use the 200-period moving average as a long-term protection, but there are some short-term protections too, but that will have to be on another talk. All right. But notice how you come in between that space, and this space seems to capture the declines in BABA quite nicely. We buoy out of those space. Now, this is the drop. This is the drop that everything experienced based on the pandemic this year. We slip right back into that space and buoy to new highs. Now, remember what I told you. We're using this space concept in two ways. We're using it to find some very fascinating entry opportunities on top of the moving average or in slipping in between. But we get away, we have to reduce. We come back. When we come back, we add. All right, you know the color game. You know how to do this now. All right, it's not rocket science. We're adding above red. Boom. We're adding above red. Boom. We're adding above red. Boom, because we've touched here. Okay? But we've got to take away. We've got to reduce. We've got to reduce away. You don't have to sell all. I'm not a huge supporter of selling all of your very valuable wealth plays. We reduce, we don't eliminate. That elimination is trading. I want to be in things that I never go to zero in. I never want to go to zero in Microsoft. I never want to go to zero in Apple. I never want to go to zero in Nvidia. I don't want to go to zero in Ababa. I don't want to go to zero in certain things like a Home Depot, a Costco, a McDonald's. I don't want to go to zero. Reducing is what I do. Eliminating my very valuable wealth plays, I never do. I accumulate them. All right. Now, I will tend to sell down to as much as a 20% position. So I'll sell out of 80% of my position if I think that the move away is extreme enough. But I won't typically go below a 20% position. Then when we come back in the space, if I've sold off 80% on the way up on this away, I'm coming back in to put that 80% of my play back in the play. All right. And then if I'm up here selling 60, 70% of the play, I'm waiting for the next opportunity to add that 60 or 70% back in the play. And it is this back and forth with very valuable, wealthy companies that have longevity, that we know will have longevity. All right. Microsoft's going nowhere. Trust me. Okay. Costco, speaking of Costco, look at how beautiful this is over the last 10 years, guys. We've been playing this for over 10 years. Look at this thing. And look at how a 12-year-old could do this. Look at your green take out red right above the moving averages. Boom. Look at your green take out red. Remember, you don't have to slip in between. You can start right above it. Boom. 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 I love this game. Away, take some off. Away, take some off. Away, take some off. All right. And if you're riding it kind of close, I don't see a take some off opportunity here yet. There's a difference between away and just profits. Like Costco right now is just producing profits, but it is not significantly away from that moving average. Not enough for me to do another round of profit taking. That's just sit back, ride this thing, and enjoy the increasing wealth. Okay. All right. If you can give me like a 5-minute warning before I'm done, that would be very helpful. What time do I have until?
Yeah, no problem. We are about at the 5-minute.
Okay. All right, cool. Fantastic. I appreciate that. Thank you. All right. So guys, look, you know this. Here's Etsy. This is something I follow. Now, in all honesty, I am not in Etsy, but it's something I've recently been following. But look at that space concept, guys. Guys, do you see that? How beautiful that is? Look at those buy points right off the 20. Look at the move away. Look at the move back. Look at these additional entries. Look at this move away. You know what you should be doing now. You're very far away from the moving average. You know this. All right. So, and guys, just imagine this, guys. In a short period of time, I've given you a very simple but very powerful approach to your wealth trading that can reward you for the rest of your life if you apply this to the right companies, the companies that have longevity and are very wealthy. And if I had you for 6 months, if I had you for 3 months, if I had you for a year, if I had you for 3 years, oh my God. We do some really amazing things together. Here's Facebook, guys. Some of these things, I'm in Facebook at $18 and $21. 352 of us are in Facebook, and 2 initial entry prices and additional opportunities along the way. Look at those things. Look at the space concept I've explained to you. Take a look at Home Depot. We're in at $28 initially. And look at all the additional opportunities after our initial $28 foray into Home Depot. All right. MMM, I have to admit to you, I'm not in it. Someone was talking about it recently, so I decided to grab the charts. But look at along the way. Look at the spaces along the way. And this is a perfect example of where the 200 comes into play. So MMM has broken below those 2 key moving averages, but the 200 caught it here. And that's a whole different topic of how to utilize that 200 in your wealth plan. That's a different talk. But look at Microsoft, guys. Now look at just how this is so powerful. It doesn't come in between the spaces. So you've got to take your opportunities right on or near the 20. Boom, boom, boom. Powerful. We are in Microsoft at $19 and $24, two entry prices initially, and all of the additional entry prices along the way. It's a very, very powerful 10-year period. And this is the game that we play, traders. This is the game that we play. This is how we play wealth. We are in NVIDIA at $9.50. All right, $9.50. Look at this thing, 439 when I took the price. Look at the space concept at work after the crash. Look at, the cell far away. We crash back between that space. We look to play the color game out of that space. Wow. Look at the profit taking opportunity. You know what you should be doing here, guys. You know what you should be doing now, just like here. All right. Listen, I find that most market players are overcomplicating things. They're pouring over reports, numbers, ratios, this and that. It's really not that necessary. I mean, it's not like you have, $158 billion under management like a Ray Dalio or somebody. All right. We don't have to play the game this way. It can be visual for us, just like this. As long as we're playing quality, we can't go too far wrong playing quality at the right time. You can have the right stock and play it at the wrong time, and that doesn't help either. But that's where I come in, the right time, and also helping you choose the right plays to go in, because people have trouble with that. Look at PayPal, guys. We're in PayPal from the $30 range. 30. Well, actually, that I'm so sorry. No, it's the $40 range we got into PayPal. But crazy, crazy high 30s, I believe. But look at the move in the space and the move out. What you should be thinking about doing now, especially as we're coming up toward this $200 round number, taking profits, of course, of course. Okay. Now, guys, I'm going to spend 2 minutes. All right. This may not be a program for everyone, but I do know that there's a percentage of you watching me here today where this can dramatically help you, whether you have a self-directed IRA account or some money on the sidelines and you want it to start working to increase your wealth over the rest of your life. This, I believe, is for you. It's a one-time cost, and we're together for life, forever. All right. Nothing else additional. And it's the cost. One little profit in one play can take care of this cost. And then the program is free, actually. So, look, I sell a lifetime wealth program where everything I buy, everything I do, every move I make, you know it before I make it and the reasons why. So, every play I've done, 400 and some odd traders have had the opportunity to do it before me. All right. In addition to that, we meet together, we study together, we review the markets together, we go over the tactics together. I make sure everyone understands. I don't want followers. That's the last thing I want. I don't want someone saying, Oliver, just tell me what you're going to do and I'll follow you. I want you understanding what I'm doing so that if I get hit by a bus one day, you can take this same approach that I've been using since 1988 and apply it to yourself and apply it for yourself. Right. So it's important to me to pass on. It's important for me to pass on the tactics, the techniques. All right. In addition to you being able to follow me, but I also want you to be able to follow. So the program's $4,000, guys. You can make that back in one play, and then for the rest of our lives, there's zero cost. But next 48 hours, I'm going to cut the price in half. $2,000, $19.97 exclusive offer, guys. This is nothing. You can lose that in one trade. Okay. We're talking about a lifetime of education, a lifetime of meeting up together, a lifetime of studying together, a lifetime of you knowing every single move in the markets. My biggest play this year was calling the market top right at this show in Orlando on February 7th, calling the top, shorting the markets in front of hundreds, if not thousands of people. In addition to that, I called the bottom on March 12th from my hotel lobby in Times Square, right? This is live and documented. Then after covering my short term March 12th, I told all of my wealth following, we're piling in to the cryptos now. The cryptos had collapsed as well. We went into Bitcoin, Ethereum, and oh my God, that has been the biggest score this year, up almost 400%. right? So if you're looking to have potential gains like that, if you're looking for that type of guidance, if you're looking to understand and be educated by an industry professional, guys, I've been in this for well over 3 decades. All right. I think this is where you should be. Anyway, guys, every single time I get an opportunity to grab a mic to speak to you from every rooftop, from every stage, I try to give something of value that I hope that you'd be able to walk away with and utilize for the rest of your life. I want you to understand that I understand you could be anywhere else in the world at this moment, but you're here with me. That is not something I take for granted. I want to thank you. Thank you so much for tuning in. Thank you for your time, your patience, and on behalf of the Money Show as well, thank you so very much for supporting us.
All right, Oliver, thank you so much. Excellent presentation as always. We look forward to your presentation, I believe, tomorrow at 3:20 Eastern time. So that's going to be another fantastic event. So everyone, please join us. Have a great evening, sir. Until tomorrow, we'll talk to you soon.
Ciao.